dear traders, and welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. A possibility of escalation of the conflict between Saudi Arabia and some Western countries, including the US, shapes the investor sentiment in the oil market today. The death of a journalist who criticized Saudi Arabia was acknowledged. This news helped oil prices come off lows and recoup some losses. The Brent crude benchmark rebounded to the levels above $80 per barrel. Besides, expectations of imposing embargo on Iranian oil also contributed to a rise in oil prices. The sanctions will come into effect on November the 4th. At the same time, WTI prices are not showing such bright results. Buyers of the American oil are not active today. The commodity is trading in a narrow range near the level of $69.20 per barrel on the back of Friday's report from Baker Hughes. The report showed that the United States continued ramping up production of crude oil. In a week ended the 13th of November, 873 oil rigs were active, which was 4 units more than in the previous reporting period. The Canadian dollar plunged to a weekly low against the US dollar and pulled back after that. On Friday, Canada released weak inflation data, so traders doubt that the Bank of Canada will hike the interest rate on Wednesday. With such a gloomy outlook, the Canadian dollar will likely weaken against its American counterpart. So far, the pair has declined below 1.3100. As for the commodity currencies, the Russian ruble is on solid footing. In early deals, the dollar-ruble pair attempted to break below the level of support at 65.30. Both the upcoming tax period in Russia and a rise in the Russian stock market provide support to the ruble. Besides, the appreciating crude oil also helps the Russian currency. And that's all for now. Thanks for watching and stay tuned.